Hello and welcome to Pro Trader Strategies Market Commentary for Thursday, February the 18th. I'm Eric Wilkinson, and you very well may recognize me from mainstream media where I talk about the economic data, the geopolitical environment, how that impacts the markets with some of my market analysis. And I do the same thing in these daily market commentaries, but I go a little bit further and talk about some option strategies I'm implementing into my portfolio based on those assumptions I come up with. Also, for you folks out there, on Thursdays we do webinars where I explain the streamlined process for you folks to find the optimal option strategy for any given assumption. We aren't just picking option strategies out of the hat. No, what we're doing is we look at this underlying that we have a directional assumption in and see what is the best strategy for that specific environment that the underlying is experiencing at any given moment. And we talk about that in these webinars where I don't have enough time to really go over it in these daily market commentaries. So please check those out. Also, without further ado, let's get on with that economic data. Across the pond, we got the, what was it? I thought we got something across the pond. No, it doesn't look like it really. Okay, let's just talk about here in the United States. It was the ECB monetary policy meeting accounts, and that's really nothing to really talk about. All right, so here's the United States. We had Bernard speaking earlier this morning. We got the Philly Fed coming in at 23.1, expected to be 20.3. Manufacturing sector looks like it's starting to build up. We're also seeing crude oil over here on the charts start to rally a new high, 52-week high anyway, in crude oil. We'll talk about that here in a moment. And then we also got the building permits coming in at 1,880,000, expected to be 670,000. No revision to last month's number. Housing starts though did wane a little bit, coming in at 1,580,000, expected to be 1,666,000. That number missing on the housing starts is likely due, as hot as the housing market has been lately. I'm looking at that number and thinking it probably has to do with the unseasonably cold weather that we've had and the unprecedented amount of snow around the United States. It's really difficult to pour foundations when the weather is as cold as it is. So they like to have, anytime the concrete is poured, there's water in that concrete, which is what makes it liquid. You don't really want to have that water freeze while it's curing. So that is an issue and could be what we're seeing here with the housing starts there. All right, importer prices coming in a little bit hotter than expected at 1.4%, expected to be 1%. That's usually a good sign, but it shows that there is a little bit of inflation coming into the markets. Unemployment claims, 861,000, higher than the 775,000 that was expected in revision to last month's number. If you guys remember, last month's number was a bit of a surprise to the downside. They revised that number up from 793,000 to 848,000. So with that revision and what we're seeing on the unemployment claims headline number being 100,000 over what was expected, not really a good look for the economy right now. ADP non-farm payroll came in at 231,000 layoffs, basically. Non-farm payroll employment change negative. So that not a good thing there. Also, we got the energy sector. We got natural gas storages, a drawdown of 237 billion cubic feet, expected to be a drawdown of 250 billion cubic feet. So a drawdown of less than what was expected, which is quite surprising with the cold weather we've seen. We would think that we would be seeing less of a build, especially with the fracking and the production in crude oil plummeting. A lot of byproduct, or the byproduct of fracking is natural gas. But we talked about this yesterday, where we're seeing oil productions plunge based on the cold weather. It is even more so difficult to do the fracking when it's that cold, from my understanding. All right, so crude oil inventories, a drawdown of 7,300,000, expected to be a drawdown of 2,100,000. So much bigger than expected there on that front. Also, distillates drawdown, that's what usually goes into the manufacturing. Gasoline did build a little bit. Cushing, which is inventory, was a drawdown of 3 million, and production down 200,000 barrels per day. So we were talking about the production plunge. We've been seeing those production numbers increase quite a bit. So we are seeing production go below 11 million barrels a day as of right now. And we remember we kind of touted that when we got above 11 million barrels. That was a major milestone. Today we're seeing that number go below based on weather for the most part, not demand. All right, so let's move on to the overall markets and see what's going on there. We can see crude oil is higher on the day after a bit of a swing. Overnight was really where we were seeing the weakness in crude oil, but after those economic data points, we saw crude oil starting to make some moves to the upside. Bitcoin, I wanted to talk about it again because it had another high, 53,210 yesterday, and it was strong almost all day. You know, today we're not really seeing anything, probably more of a breather here. Bitcoin does have a tendency to make these big moves, kind of roll over a little bit as people take some profits, which is what we might start to see going into next week, where we see just a little bit of rollover there in the Bitcoin. We got gold futures trying to claw some moves to the upside. We've got it up about $3 on the day, but still a very weak looking chart. Love to see this kind of finish towards the bottom of this range here. So somewhere around 1760 settlement would be good on a chart setup, because it would make this doji look like it has created a bottom, and then hopefully we can get that rebound. I'm still long gold. I am out of my TLT as of yesterday on that little bit of a rally towards the end of the day. I decided to get out of that TLT. Just does not seem like interest rates are going anywhere other than up. We are kind of reaching an area where we found support back in 2016, again in 2018, and then bounced off of that right after the pandemic for a very short time. So that level is kind of lining up right around 1.3%, and that is going to be a key area of resistance now that we have been below it. Like I said, it's acted as support a couple of times. Now it's going to be acting as that resistance in the 10-year, not necessarily correlating to the bonds exactly, but they are running very closely lockstep there. All right, we got the VIX moving a little bit higher today because we're seeing weakness across the board in the equities. You can see the Dow Jones Industrial Average down almost 250 points near the lows of the day. NASDAQ did not create that pattern that I was looking for yesterday. We settled above that 9-day simple moving average, which gives us that continuation of this messy topping type of pattern. But it looks like today with the confirmation, it looks like we are starting to make that rollover happen. Again, over in the E-mini S&Ps, yesterday's settlement didn't really give us a whole lot of insight on the tea leaves as to what the directionality would be. But today, we're seeing some weakness down 34 points in the E-mini S&Ps, and we'll see that exacerbated in this chart here. As you can see, yesterday into the close, very strong, but overnight just weak, and no attempt to really flush those guys out on the weakness that we're seeing. I don't think that economic data points that we were seeing were that bad here in the United States to really cause this weakness, which makes you wonder really what's going on with the equities when they're showing this much weakness and seeing that overall strength in the data points that we talked about. But Walmart did come out with earnings and is really causing a lot of weakness in the Dow Jones Industrial Average. Probably the thing that's really leading the charge to the downside is they missed on earnings. We'll talk about that here in a minute because I have Walmart in my portfolio. All right, so TLT, again, yesterday we got a bit of a move to the upside, but I decided to get out of my May 153 calls in there. I originally paid $2.95. I got out of them for $2 for a loss. Obviously, just not getting the directional move in my favor. I did get some volatility expansion, which is helping me hold on to some of that value of those, especially with that big of a move that I experienced during the life of this contract. I put this on the February the 9th, and I got maybe a day or two of upside, but you can see market really just kind of falling down, so I just decided to pull the ripcord on that one. IBM added covered calls to this long strategy. Remember, I just recently got out of my IBM 125 calls that I was short, made a profit on that, decided to roll out and up yesterday and went into the March, sold the 130 calls in there for 53 cents for IBM. Again, doing a covered call strategy, trying to lower my overall cost basis on these IBM that I'm long at around 120. But I've lowered my cost basis quite dramatically on this trade. I don't have those numbers right now, all of it together, but we'll go over that when I cover this trade for a profit. All right, so we'll keep your eyes out for that. Walmart, miss on earnings. Tried to talk quite a bit about some of their store brands. Now, you guys remember when this whole pandemic started, I said that I think that these stores are going to do very well with their label, where like Kroger, Safeway, those Albertsons all do the Signature Select. Walmart has theirs, and it's great value or something like that. But their salsa, I talked about this, one of the things with the pandemic is it kind of forced all of us to check out some of these companies' brands, and they're actually pretty good. It's not like the old generic thing where I grew up where you had a white label and just generic writing on it. Now these companies are making their own label, and the stuff is actually really good. If you like salsa, I think Walmart's got one of the best ones. So please, you could check that out. And I'm not trying to do that to pump my position. I'm just saying that because it's a fact. All right, so with that being said, you guys remember I got long Walmart using the March 150 calls, and I also did the 155 calls that I'm long in there. Obviously, with this move and the volatility coming out, those calls are not looking good. But I'm going to leave them on because at this point, to me, it's not really worth taking it off for pennies on the dollar. So I'm just going to let it ride and maybe hopefully get a bounce in the next 30 days that I have in this March contract for the Walmart trade. But what I did yesterday for the earnings is go in there and sell the February 155 calls for a covered call trade in my long March options. So basically just trying to lower the overall cost basis of what I paid for those 150 calls and the 155 calls by covering it with those February 155 calls. So with that being said, yesterday, close to the end of the day, I went in there and sold the Feb 155 calls for 50 cents, bought them back for a penny this morning. Just trying to lower that overall cost basis on that trade. Does not look good for upside in Walmart to make new highs when they missed on these earnings by about 20 cents. So, but I'm going to write it out at this point in time. There's, like I said, no real reason to cover it with that much of a loser going on. All right, guys, please take a moment to check out our disclaimer. As we're an educational company, there are risks to trading, so please make sure you know the risks before getting involved in trading or investing for that matter. You can lose money investing as well. So know your risks, know your rewards, and have a great one. Hope to see you today at the webinar, protraderstrategies.com. We're going to be doing it on protective puts, and with these markets looking like they want to roll over, it might be the optimal time to start adding some protection with extremely low volatility in the markets. That is the time where we're going to be looking to do something like that. All right, that's all I got. If you can't take that, take it easy.